There's nothing more that has a bigger cult following than crypto. And I love crypto long term. I love specifically Bitcoin long term. In my early career, I was just like everyone else. Put all your money in, try to double it overnight. And you know what? I blew up my account countless times. So now I've found that if I do the right thing and just stay slow and steady, it really does win the race. I don't necessarily believe the lows are in on Bitcoin just yet.
Hello and welcome to Crypto Street. In this video, we have the privilege of featuring Gareth Soloway, who will provide valuable insights into the crypto struggle. Today, our focus will be on unraveling the secrets of Bitcoin's future. However, before we delve into our discussion, let's first examine the recent developments in the cryptocurrency market. As the summer season arrives, a notable heatwave is gripping financial markets, setting the stage for potential shifts and challenges. Market participants argue that the upside for BTC price is limited, as Bitcoin remains constrained below the $27,500 mark. At the same time, the US dollar index is edging closer to new year-to-date highs, creating concerns among investors. However, intriguingly, Bitcoin whale activity suggests that this dollar rally may be nothing more than a dead cat bounce. Now, without further ado, let's begin our enlightening discussion with Gareth Soloway.
There's nothing more that has a bigger cult following than crypto. And I love crypto long term. I love specifically Bitcoin long term. I really do think it will mature into the digital gold. I plan on holding a ton of it at the right time. But that doesn't mean, again, if you look at 2017, when we topped out there, we pulled back in that bear cycle to 3,500. And then we went back to 10,000, which was basically a triple. And then we went back and retested the lows. So, I mean, you can't say, well, it tripled back then off the lows and retested, but in this case, it's up 100%, but it's not going to go back. The logic just isn't there in that situation. That's a glaring red blinking light for us in crypto. And let me just put this in perspective. If you go back to 2021, NVIDIA was up 200%. Bitcoin went from, basically 20,000 to 65, 69,000, right? Same thing with other ones, AMD or a Microsoft or all of these. They were all running together. So it was a very clear risk on trade. You are not seeing that this time in Bitcoin. And what that means to me is, so I think there's a big disconnect with actually what investors want Bitcoin to be. Is it a risk asset? Well, sometimes, like we've seen, it goes up with tech, or sometimes it goes down with tech. For instance, today, right? Today, Bitcoin is down, tech is up. On the other side, we saw a few times where the banks were collapsing and Bitcoin went up. So is it a safety asset or is it a risk asset? Which one is it? And investors can't decide. And when investors can't decide, that is not a healthy place to be in the market. So again, the biggest thing to me is this chart continues to hold underneath 30,500. You've got bearish consolidation starting on this chart. We break this 25,900 level. You're going to get a leg down probably to about 24 to 23,000, which is your next support. And I will say this is that the hype when we were at 30,500, people were going nuts. I even commented, I think to you in one of our interviews, that it was reminiscent of the hype that was at 69,000, the same sort of buzz. And to me, that was a negative divergence, because if you're at this lower price and you have that same level of hype, and we know what happened there, it's likely going to repeat here. And I still am in the camp that I don't necessarily believe the lows are in on Bitcoin just yet.
Bitcoin's current price range is hovering between $26,500 and $27,000, indicating a state of indecision in the market. Despite bouncing near multiple support trend lines on June 2nd, there are little signs of a significant trend change as the standoff between bulls and bears continues, resulting in minimal volatility. Analyzing the current setup, popular trader Crypto Tony tweet, "I remain short while we are below $27,500 legends. No change in my play here, as only Ethereum is taking the stage right now." On the other hand, Ether experienced a rebound from its May monthly close lows of $1,840, reaching $1,897 on the day. However, a bullish sentiment for Ether is contingent on it flipping the $2,000 level into support. Elsewhere, others argued that time was ticking for Bitcoin price to break out, with financial commentator Ted Macro flagging favorable macro conditions. Some analysts and traders believe that time is running out for Bitcoin to make a breakout move. Financial commentator Ted Macro highlighted favorable macro conditions, while trader Mustache pointed out bullish signals from the S&P 500 as an indicator of a potential similar move in Bitcoin. In conclusion, the market remains in a state of uncertainty, with various factors influencing the future direction of Bitcoin and other cryptocurrencies.
So when people chase, it's emotionally driven, right? And again, emotion ultimately gets us in trouble, whether it's in trading, investing, or in our lives in general, right? So the key is you have to look at it and say to yourself, what is the long-term value here? What is the reality of the situation? And when you're chasing, what you're hoping is it's the better fools, or whatever they say, the bigger fool model, right? Where you're hoping that someone else will pay higher, even though there's no valuation that makes sense, just because essentially you want to get rid of it after you jump in at a high level already. So for me, I don't want to be that. I don't want to be in that game. Why play that game when, again, it's an odds base? It's basically like going to the casino and playing a hand of blackjack. I want the odds in my favor. The way I get the odds in my favor is simply by finding good charts, discounted quality names into technical levels. I'm glad to be in these safer names. I don't need the adrenaline rush in my life anymore of maybe I make a lot of money overnight. No, a slow and steady, and I've done this, and I'll tell everyone out this. In my early career, I was just like everyone else. Put all your money in, try to double it overnight. And you know what? I blew up my account countless times. So now I've found that if I do the right thing and just stay slow and steady, it really does win the race.
This heat is coming in the form of the US dollar index DXY, which has been on a remarkable uptrend since late April, reaching levels unseen since early March's banking crisis, when the dollar wrecking bull wreaked havoc on asset prices. This surge in the dollar has raised concerns among market participants due to its high inverse relationship with Bitcoin, a topic many macro and crypto analysts have discussed repeatedly in 2023. The implication of this inverse correlation means that when the dollar rises, BTC falls and vice versa. The chart below showing the year-to-date performances of DXY blue line and BTC orange line underscores this relationship a step further. On the surface, this would imply that BTC still has quite a deep correction ahead before any hopes of new year-to-date highs emerge. Taking a look deeper, however, it's clear that some divergent signals are beginning to emerge that suggest this dollar rally could be nearing an end.
There's nothing more that has a bigger cult following than crypto. And I love crypto long-term. I love specifically Bitcoin long-term. I really do think it will mature into the digital gold. I plan on holding a ton of it at the right time. But that doesn't mean, again, if you look at 2017, when we topped out there, we pulled back in that bear cycle till 3,500. And then we went back to 10,000, which was basically a triple. And then we went back and retested the lows. So, I mean, you can't say, well, it tripled back then off the lows and retested, but in this case, it's up 100%, but it's not going to go back. The logic just isn't there in that situation.
Thank you for watching. We appreciate your support and engagement. Don't forget to like this video and subscribe to our channel for more engaging content. Your feedback is essential to us. See you soon.